Except you, Anna. I won't mute you.
Don't move me.
Okay, Anna, you want to do a quick introduction and then I'll bring the slides up?
Yes, absolutely. Good morning, everybody. Again, my name is Anna Getman. I'm an escrow officer here at Chicago Title Fresno Madera operation. I also do the training here. I'm going into my 28th year of being an escrow. I started as a receptionist 28 years ago, and here I am. So with that being said, today's topic is super important, super interesting. I suggest that if you're here today, I suggest you, once you get the recording, I suggest you watch it maybe 2 or 3 times because there's a lot of information and it could be overwhelming. And it's something that you want to keep in the front of your thoughts when you're taking a transaction as a listing or you are representing a buyer. So I encourage you to save the recording and watch it a few times so then you are a little bit more comfortable than most that aren't on the call when you have this situation.
All right, with that, I'm going to start from the beginning.
Okay. Today's class, as everybody knows, the anti-money laundering regulations for residential real estate transfers. So that is the full name, but when you engage with your escrow personnel, they may be referring it to the RRE, and so that is the actual name. But the acronym that we will be using going forward with the escrow personnel would be the RRE. Why we are here. So if some of you may be familiar with this being rolled out late fall, early winter. This was initially supposed to launch in December. Fortunately, it did not. Gave us a little bit more time to prepare. But it's basically illicit. It's to uncover the individuals behind the entities. Illicit actors often favor non-finance transfers, meaning cash transactions. However, please do not fall under the misconception that if your transaction is not cash, that is exempt. We'll go into a little bit detail further on down the class, but basically including all cash sales of residential real estate to avoid scrutiny from financial institutions that have anti-money laundering and countering the financing of terrorism program, suspicious activity report, filing requirements under the Bank Secrecy Act. And what that means basically in short version is all your bigger financial institutions have systems in place that they've actually been doing this for quite some time. So now they are trying to capture all of the other entities, settlement agents, smaller financing institutions to be able to start practicing this information gathering to be able to be reported. Illicit actors also often hold residential real estate in the name of a legal entity or trust. So if you have an individual buying and they stay in their individual name buying, then your transaction is exempt. In the effort to obscure their identities and their ownership interest in the property, transfers that are both non-finance and involve a transferee that is a legal entity or trust are of higher risk for money laundering and make the proceeds of crime and their owners more difficult to track and identify. So all the entities, your LLCs, general partnerships, all that good stuff. I feel that we are going to be able to have an easier time collecting the information from these type of entities. Where we're going to fall a little bit difficult is those trusts. And again, we'll go over that a little bit further on down. The reporting of these transfers will help curtail the anonymous laundering of illicit proceeds through the purchase of residential real property, which threatens the U.S. Economic and national security. So again, in just a short version, is they are putting this in place to uncover the individuals that hide behind these entities and trust. and because that's how they are laundering the money through real estate transactions. It might come up a little bit down the class, but if you are handling a transaction that is not intended as a single family residence, or even if it's a vacant lot that is zoned, or if it's a ag ranch property that has a dwelling on it, but it's zoned. These are the type of things these are the type of transactions that are not exempt and that fall under this rule.
And I just want to chime in and just be very specific, as one of our Western training directors was. People do use real estate to funnel the money that they're getting from drug sales, from sex trafficking, from human trafficking. They're looking for big places to park their cash and keep it safe and make it legal. And unfortunately, there is enough of that going on that the government decided to cast a wider net to identify these people.
Thank you, Jennifer. And so now, why is there now a rule? And just like Jennifer just mentioned, it's to be able to hone in on these type of individuals, hone in on these type of transactions, to be able to, curtail, just to be able to just get a handle on these type of situations. So it is put in place in effort to combat the money laundering. The Financial Crimes Enforcement Network, which is now everybody is now aware of the acronym FinCEN. That's exactly what it is abbreviated from. Issued a new rule for residential real estate transfers. Reporting persons will be required to report covered transactions beginning March 1st, 2026. Now that is a Sunday. We don't close transactions on Sundays. So our date that we are required to start reporting, it would be Monday, March 2nd. So I encourage you to reach out to your escrow personnel, that if you have any, after you finish this class, obviously, and if you have any transactions that fall into this, the criterion that is not exempt, that you start the legwork and help, be a team in helping your escrow personnel. Talk to your clients, tell them that they're going to be reaching out to collect this information, because we are actually starting to collect this information to date. We launched our information gathering system. It was launched Monday, but technically Tuesday, since Monday was a holiday, because in the effort of those closings that are going to happen on March 2nd, we don't want to wait to March 2nd to gather this information. We want to be ahead of the game, and we're starting to gather the information. So when that close date does approach and it's not exempt and we are required, we are in a greater position to be able to report and to close transactions in a timely manner without delay. So who's enforcing it? Again, the Financial Crimes Enforcement Network, FinCEN, is a bureau of the U.S. Department of the Treasury. The director of FinCEN is appointed by the Secretary of the Treasury and reports to the Treasury under Secretary for Terrorism and Financial Intelligence. FinCEN's mission is to safeguard the financial system from illicit activity, counter money laundering, and the financing of terrorism, and promote national security through strategic use of financial authorities and the collection, analysis, and dissemination of financial intelligence. It's a lot of information. It's this big entity, of government entity. They are in charge of a lot of facets of illegal activity. And so this just kind of falls into one of their areas that they are trying to get a handle on. So this little flow chart is, I encourage you to reach out to your sales exec to obtain a copy of this flow chart. I know it's super tiny and it's hard to read. Hence why I feel like you should reach out to your sales exec to obtain a copy. But it's a very good tool. It helps you understand the process of from pretty much getting into a transaction that falls into the criteria of reporting, and what needs to happen. how we initiate the gathering of the information, how we follow through of making sure that we get the information, and how we have guidelines in making sure that our information that we've gathered is not insufficient or incomplete, because we have to make sure that the information is, sufficient, true, and correct, and that the form that is being issued is completed in its entirety, that there's no missing information or skipped fields, because we are not going to be able to report if there's missing information. If we attempt to report and there's missing or insufficient information or incorrect information, we will get a bounce back as the settlement agent, stating that we haven't completed the information gathering and correct submission. Fast forwarding, we are required to report the information, and as soon as we get clearance that the information is complete and sufficient, then we are able to move forward on closing. We do not have to wait for any kind of results from the information, as if the individuals were cleared, that they were criminals or anything like that. We don't have to wait for those results to come back. Our guidelines and the criteria that has been set forth upon us is that we have to report in a certain period of time in order for us to move forward. So we are putting in place practices that we are going to attempt to gather this information at the beginning of the transaction, especially because most cash transactions open and close within a few weeks. And of course, sometimes cooperation of both buyers and sellers are a little bit difficult at times to gather information. So we are making that effort and putting procedures in place to try to get that information at the very beginning of the transaction, which will start with our platform starting here. What properties are to be reported? Transfers are reportable when they meet the following criteria. The property is a residential real property. Like I mentioned earlier this morning, that even though the property is vacant, if the intention is to build a single family residence or any kind of a dwelling that you can live in, that falls under that criteria. The transfer is non-financed. That falls under the cash transactions. The property is transferred to a legal entity or trust, and the exemptions does not apply. So having said that, transfers meeting the rules requirements must be reported regardless of purchase price or the value of the property. Gift transfers are thus subject to the rules. So anybody that is transferring as a gift and the buyer is an entity or a trust, they do fall under this rule. Another little caveat that I want to point out is we have transactions that are financed, seller carryback, non-traditional institutional financing, like your non-UWM, Rocket Mortgage, more like for instance, for an example, Kiavi, Lending Home, Zinc, more of those smaller lending institutions. Even though you come across and you're like, oh, my transaction's not cash, I'm perfect. If the transaction is being financed by these type of lenders, you can't just write off and just assume that your transaction is exempt. Again, the responsibility falls upon us as a settlement agent, and we will be, but don't be surprised if your escrow officer is saying, I'm going to have to gather information to report, and you say, oh, but it's not cash. This is the little caveat, because like I mentioned earlier, those larger finance institutions, they have systems in place that they've been doing this for quite some time. These smaller financing institutions haven't been and don't have things in place. Now they may be putting things in place, but we need to reach out to the lender and saying, are you reporting? If they're not, we're required to. Most cases, we're going to be the ones to report in those instances. Definition of non-finance transaction. I just went over a few instances, but basically for a transfer to be reported, it must be non-finance, meaning it does not involve an extension of credit to all transfers that is both secured by a transferred property and extended by a financial institution subject to the AML program, which I was just discussing earlier on those larger institutions. And suspicious activity reporting, the SAR obligations, and transfers that are not financed only by a lender without obligation to maintain an AML and file SARs, such as a non-bank private lender, are treated as non-finance transfers that potentially must be reported. Okay.
And I think we skipped the slide that kind of just expanded on all the definitions of the property, just so that people are aware that even if it's a apartment complex or a fourplex or things like that, that will require reporting. So
that was my I think my slides got mixed up. Anyhow, yes, that's right. Definitions of transfers, entities, and transfers trust. Is that the slide that you were?
What properties are to be reported? It should have been right before definition of a non-finance transfer.
A transfer of the residential real property. You want to go back to that slide so I can just elaborate? And
I'm on that right now.
While she does that, basically.
I'm on it. Are you guys not seeing that on the screen share? What properties are to be reported?
It's a different, I just went over.
Not on the screen.
It says definitions of transferee entity and transfer trust.
No, that's 2 slides down. So if everybody's good with understanding that, I'll skip ahead to the what properties are to be reported. This was the definition of residential real property.
Sounds good.
Okay, let's skip ahead. Okay, so now we'll go to that.
Okay. So definitions of transferee entity and transfer trust. A transfer of residential real property must be reported if at least one of the new owners of residential real property is a transferee entity or transferee trust. So if you have multiple buyers, and oftentimes we do where we have a buyer, a buyer that's a trust and the buyer that's coming into title as an individual along with the trust. Even though you have an individual, you still have to report because one of your buyers is a trust or an entity. These categories include legal vehicles commonly used to own property, such as limited liability companies, corporations, partnerships, and trusts. Both domestic and foreign entities and trusts are covered by the reporting requirement. So best rule of thumb, if your buyer is not an individual, you're not exempt. Even I had a question from a real estate agent the other day, which was a very good question. We come across the buyers that are they're being financed by their entities, but then they're also being financed by like these for benefit of the equity trust company that type of thing. Those, because it's still not an individual, those are reportable. They're not exempt. So I know that there's those kind of transactions come across every so often. Okay. Exemptions from reporting. Exemptions are provided for certain common lower risk transfers. A reportable transfer does not include a transfer and easement. Okay, so access easements, granting access, utility easements, any of that will fall under that. A transfer resulting from the death of an individual, whether pursuant the terms of a decedent's will or terms of trust, the operation of law, or by the contractual provision. Okay, and then another one is a transfer incident to divorce or dissolution of marriage or civil union. A transfer to a bankruptcy estate. And last, a transfer supervised by a court in the United States. So these are the exemptions from reporting. If your transaction falls in that list, then those would be exempt. Exemptions are provided for a transfer made for a non-consideration by an individual, either alone or with their spouse, to a trust, of which that individual, their spouse, or both of them are the settlor or grantees. So if Anna Getman is transferring to the Getman Family Trust, where I am the settlor or grantor, then that would be exempt. But if Anna Getman is transferring to Linda Federico, successor trustee of the Jennifer Shepherd Trust, that's not exempt. The next item is they transfer to a qualified intermediary for purpose of like kind. So that is your 1031 exchanges. And then last, a transfer for which there is no reporting person. Who is going to be reporting? Generally, the settlement agent. The settlement agent, which is typically your escrow company, is the one responsible to report transfers covered by this rule. There is some caveats to that. If you are doing a title only and there's no escrow involved, the title officer is responsible for reporting. So that gets a little bit tricky. And I'm not going to go into it, but it'll be a completely different animal in Southern California because they conduct business a different way. But I just want to put that little thought in your mind if you happen to have transactions in Southern California. Next slide. When will our company begin the process of collecting data from customers? As I mentioned earlier, when we have any transactions that are scheduled to close on March 2nd, that's the day that we are required to report. Now, we are starting to collect information. I know it says February 9th. There was some things that I don't want to say glitches because it wasn't glitches, but things that we wanted to make perfect a little bit, more streamlined. We were going to go live on February 9th to start collecting this information. And because we wanted to maybe, like I said, make it a little bit more streamlined, we backed that up to February 16th. So we are now in a position to collect this information through our in here portal. So if you are not familiar with that portal, please contact your sales exec because it must be something that's going to be in your vocabulary as far as transactions with Chicago Title, that because your clients are going to ask, and again, you can refer them to your escrow officer, escrow unit, but it's best that you understand and know what our in here portal is, because that is the way that we are going to be collecting information, reaching out to the clients to start the process of collecting information, and how we gather the information and how it comes back to us. So it's very important. If you're not familiar with our in here portal, again, please reach out to your sales exec or your escrow officer, whichever is easiest for you to get that information as quickly as possible. Required information. The final rule requires that a reporting person provide information about the transfer of the residential real property, identifying the following: the reporting person, which is your settlement agent, your escrow office, escrow unit, the legal entity, transferee entity or trust, transferee, trust, receiving ownership of the property, basically your buyer, the beneficial owners of the transferee entity or transferee trust, and then certain individuals signing documents on behalf of the transferee entity or transferee trust during the reportable transfer. Basically, your authorized signers for all these entities that these requirements fall under. And then the transferor, your seller. So there was a big misconception that only the buyer's information was going to be collected, and that's not the case. if the transaction falls under all of these rules and is not exempt, we will be collecting information from the buyer and the seller. And then the residential real property being transferred. Basically, what I was referring to earlier is like so commercial, your retail, all that, those are exempt. It's basically if you can inhabit the property, it falls under the requirement. And then total consideration and certain information about any payments made. So the first half of the form is going to be for the buyer to fill out, and the second half is for the seller to fill out. Beneficial owners or transferees entities.
Hey, Anna,
The
they did say if it's mixed use, it qualifies too. So if there's an apartment on top of a commercial building.
Yeah. So if someone can live there, basically that's the rule of thumb. And then to be the beneficial owner of the transferee entity, an individual must either directly or indirectly exercise substantial control over the transferee entity or own or control at least 25% of the transferee entity's ownership interests. So those entities that are divided up as percentages, if their percentage falls in that criteria, in that percentage amount, their information is going to be required. Okay, and then the definition is consistent with the definition of beneficial owner in FinCEN's beneficial ownership information reporting rule. I suggest you guys explore the FinCEN.gov website. The one that is very beneficial to get yourself familiarized is the FinCEN.gov/RRE as well, on top of the link that's on the screen now. And then continuing the beneficial or the required information, the beneficial owners of transferee's trust. The beneficial owner of the transferee trust is any individual who is a trustee, otherwise has authority to dispose of transferee trust assets. So kind of just like what the entity was, the authorized signers is basically the information that's going to be given. On top of is the beneficiary who is the sole permissible recipient of income and principals from the transferee trust, or who has the right to demand a distribution of or to withdraw substantially of all assets of the transferee trust, is a grantor settler of a revocable trust, or is the beneficial owner of the entity or trust that holds one of these aforementioned positions in the trust. This is a little bit tricky because we often, before, when we would request copies of trusts to verify who is authorized to, that has the authority to act upon that trust, trusts are very personal, and we get that, and we don't want all that personal information. It's none of our business. It has nothing to do with our transactions. However, in this case, and we often tell the customer, we don't need your entire trust. We don't need the whole binder. We don't, again, it's none of our business what the trust talks about of all the assets and all that stuff. We just need the portion that talks about who has the authority to sign for the trust, and in the event if that person is not able to sign for the trust, who follows behind, and so on and so forth. Well, in this scenario, and then of course we ask for the signature pages, but in this scenario, this may be, you're going to fill out this information, but this may be a little bit where your client is not sure how in depth they have to give this information, as far as like, beneficiaries, who has the right to do all of this, if the paragraph kind of lines out. Unfortunately, and we cannot guide the individuals on how to complete the information. So when I had mentioned earlier before that all these, the LLCs and the partnerships and the corporations shouldn't be having a problem, the trust is when it gets a little sticky and a little bit where the clients are unsure of how much information there are required to complete in the forms. But this paragraph should have a little bit of a guideline for them. But again, we as a settlement agent are not allowed to help them fill out the form, tell them how to fill out the form, and guide them. We provide the form, ask them to complete it, and collect information back.
Anna, we do have a question in the chat for clients that are not tech savvy. Can we collect the necessary info another way by the client coming into the office or anything like that? What would be your answer for that?
We are in the process of addressing that. Excuse me. We are in the process of addressing that situation because we are aware of quite a few clients, that don't have an email, a way to complete this. Unfortunately, we are required to submit the information electronically, so there's not a form that we can write in and fax over. We have to submit it electronically. So we are actually in the process of figuring out how to address those particular clients where they may have to come into our office. We may have to have some sort of a way for us to have them input the information themselves, maybe on a computer of ours or whatever the case may be. But we are in the process of ironing those situations out because we are aware that they will come up, especially for the trusts. They will come up, but we will manage through it and figure it out. And that's why, going back to my initial point, it's so important for us to start addressing this situation, whether we have to report or not, at the beginning of the transaction, so we can make those accommodations, so we can address those situations, and so we can submit that information and we don't delay your transaction. But yes, we are in the process. Every office may be different, so I suggest that you contact the office that you're doing business with and ask them what are they planning to do to help that type of situation. Now, I know that that's a conversation that corporate is having as well, and it's soon going to be trickled down to our offices. So there will be an answer for that. I just don't have it today.
Perfect. And then we have another question about, will this required information page be provided to the buyer so they know what to provide? And I know the answer to that is yes. So is this a good time to segue into the form and you sharing what we'll be telling people about it?
Yes. So don't panic when you see the next slide, next few slides.
Hang on, I hit the button. Close that and poof. Okay.
Okay. So I know initially when all this information started to roll out, it was a little bit overwhelming when the number 111 got rolled out. Yes, there's 111 question/fields. Now, keep in mind, that's not just for one individual. It's for both, not individual, bad choice of words, one party or not. So the 111 is a combination for the buyer and the seller. It's not for just the one party of the transaction. So, of course, the first part of the form is addressing the buyer, and then the second half is for the seller. So this is what the form looks like. It talks, and a lot of the information, or I shouldn't say that. Some of the information is repetitive. Basically, duplicate information, but it has to be completed. Depending on the scenario, depending on if it's a trust, depending on if it's an entity, depending on how many authorized signers that there are, it all depends. So it does look a little scary if you want to flip to the next slide, but it's basic information. It's basic identity information. Again, don't panic. This looks like a lot, but in reality, like back in the day when we filled out job application, that seemed like a lot. But at the end of the day, we will get used to this. And some of the fields are, if this is the case, then that type of situation, but not all. So some may not apply. Some fields may not apply. Or they may, and you may be completing the entire form. But this is the form that does fill out, and yes, like Jennifer said, it would be available just for, in preparation for what has to be filled out electronically. When is the report due? Okay, the collection of this information about transfers covered by this rule will be collected by the settlement agent prior to closing. Incomplete forms will not be accepted by FinCEN. So what I was referring to earlier is we will submit the information, and just because we submit the information doesn't mean we can close the day we submit. We have to make sure that the information submitted is satisfactory by FinCEN. Again, we don't have to wait for any kind of results on their investigative period or side. We just need to make sure that the information that we submitted is satisfactory by FinCEN, and we may move forward in our transaction. So I am not a black and white person. I'm very colorful, and I want to stay that way. So I'm sure all of your escrow personnel feels the same. It takes a certain kind of individual to be an escrow. So we are typically rule followers, and we like detail, and we like structure, and we like to make sure that we do a job to the fullest. So should we be in a position where we didn't report, it'll fall on us. And I don't know about you, I have a house payment, I have a kid in college, like I don't want to be put in jail. There are penalties, but there are other, ramifications. But what happens if not reported? So there are willful and maybe, I don't know what the word to use, but willful or just basically not understanding and not realizing the reporting had to have been done. So basically, this is a little snapshot of what could happen. Up to 250,000 fine and 5 years in prison. Again, I like color. I don't like orange. Willful while violating another law, 500,000, 10 years in prison, structuring or assisting in structuring a transaction to avoid reporting, fine, and up to 5 years in prison. I want to highlight that one because I know the escrow staff that's on this call, this happens more times than not, where you're in a cash transaction, or it can even be like those non-traditional finance transactions where an individual calls the escrow officer and said, or they get the question, how would you like to be vested on title? And they're like, oh, well, I'm glad you asked, because I actually want to go on title in my trust. Well, this often happens on cash transactions, maybe 1 or 2 days or right before closing, and it's like, oh, okay, we cannot coerce or talk the individual into or out of taking title in their trust because, that's structuring or assisting in structuring. We can say, okay, great, you want to take title in your trust. I'm going to forward you some information. You're going to get a link for information gathering. Portal, and please complete it, in its entirety, because we are unable to move forward in the transaction until we gather this information. Now, they may ask the question, oh, why? And then we have to let them know why, because, we're a settlement agent that's required to report. It's up to them. We cannot say, oh, if you take title, you're going to have to do this is what we can't do that because that's structuring or assisting in structuring, so the individual doesn't have to report, if that makes sense. Willful separate violation occurs for each day the violation continues and each location of violation continues. Greater of the amount involved up to $100,000, minimum $25,000. We have a time frame of when we have to report. We are not exercising the time frame in its fullest because, again, we don't want to delay any closing. Failure to file a report, material misstatement or omission, not to exceed the amount involved in the transaction. Structuring or assisting in structuring a transaction to avoid reporting, not to exceed the amount involved in the transaction. And then negligence. Not to exceed 500 or 50,000 in a pattern of negligence is found. And that's what I was mentioning earlier, just not being educated enough or versed enough of whether you have to report or not, and it being a pattern. It's very important that we all understand this, but we as a settlement agent, I've been pushing and trying to train all the staff here in our operation for the last month or so, just so everybody is comfortable and understands, because ultimately it does fall upon us and it's our responsibility. And pretty much we're the gatekeeper of this. So it's our mission here to make sure that all our escrow staff understands when, how, and where, as far as reporting is to take place.
Thank you, Anna. And on the criminal violation, that is mostly going to be on the buyer, if they lie, because we are not in charge of determining whether that information is valid or not. All of our determination is if the information is complete. And so if we are fed information that is false, it will fall back on that buyer, and they will be the one subject to criminal penalties if it turns out that they have falsified any of that information.
And Jen, there's more questions in the chat.
Yes. So I do know they're asking how many forms. It's all under one form, and it just has many pages to handle the many questions. There's a question about how is anybody being charged any additional fees to collect that information. And I do know that we are given the leeway to collect a fee, which would be charged to the buyer, but that fee is going to be set by the settlement team for every individual company. There is not a standard that has been established yet. And so your escrow officer will be sharing what that fee is going to be with you. Is that correct, Anna?
Yes, that's absolutely correct. So, and that will be determined in the next, I would say, week or so. So it won't, of course, you'll know before closing.
And then can a person buy a property with cash as an individual and have escrow quitclaim it into their trust afterwards? That would be a hard no, because that would make it appear as though we are helping to structure the transaction in order to avoid the reporting, and we cannot take that risk. So Anna, I'll let you chime in.
Absolutely. I was shaking my head. No. So I haven't dove quite a bit into outside of the responsibilities of deeds recording from, an individual into a trust outside of escrow, but I understood and heard through the grapevine, a lot of these paralegal companies and, where they do that. I think it all depends on how it's, how and why it's being transferred in trust, but we will not do that, because it does follow under avoiding any kind of reason or knowledge to avoid the reporting. It's not going to happen.
And then Beth Carver asked a great question. Do you foresee one of the agents could be interpreted as structuring or assisting to avoid reporting if one of the agents advises buyer not to take title in a trust? This actually came up at a real estate meeting that I was at yesterday. And at that time, what was advised was to contact the CAR hotline if you had any questions about what to do from a real estate reporting angle. And of course, as a broker, just to gather as much information as you can. So the real estate agents' names are not a part of the reporting that we are collecting in the form, but I don't have the answer to that. Do you have an answer, Anna?
I did come across that just as a one-on-one conversation, and whether this scenario applies or not, no one should be advising as an escrow officer, escrow escrow staff, or a real estate agent, you shouldn't advise how someone should take title, because every individual is different. The reason why they want to hold title a certain way, whether it's an individual name, a couple as joint tenants, community property with right of survival. Every scenario is different, and their intention is different, and their tax ramifications different, or however you shouldn't advise without even this scenario being in the play of how your client should take title. We have sheets that explain ways of holding title and what it means. We can provide those to you to provide to your client, but even more so in this situation, you shouldn't be advising them not to take title in their trust just simply to avoid the reporting.
Right. And this reporting is strictly for the Financial Crimes Enforcement Network. So it's separate from any type of reporting that's needed for their taxes or anything like that. As far as we know, there's no information sharing between the entities. This is strictly being put in place to help prevent money laundering. And
Correct.
so even though it is not fun to fill out the form, there's not a risk for most people conducting business legally in filling out the form. And so I hope that that helps a little bit. And we did have a question about if you get that last minute request to put it in the trust instead of the individual names, about how much time will that delay our close of escrow? How long does it take us to gather that information?
Well, right now it's all new to all of us. So basically the most complete, it all determines on how complete the information is. If the information is complete and we turn it in, this is all new. When I was reporting, because there are areas in California that have been doing this for quite some time. The turnaround time was 24 to 48 hours that I was getting back saying, okay, we're good. You're good. You can move on. Now, with this now being in effect everywhere, I don't know if that affects some kind of turn time. I don't, nail me to the wall and say, Anna said 24 to 48 hours. This is so new. It's happening everywhere. And, but I just encourage that you encourage your clients, if you fall in this situation, to try to complete the information in its entirety accurately and get it submitted as soon as possible. So because once we get it, it's literally a few clicks of the button for it to be submitted. Because again, it's living outside of our escrow, because it's not our requirement. We're just, we're the road being used to get this information from the clients to FinCEN. So it has nothing to do with the actual file. So even though we're using it's outside of our escrow, so it's basically gathering it and we're just delivering it. So I would love for it to still be 24 to 48 hours for us to get that clearance from FinCEN. I don't know. And the moment I find out, I will pass that information on to the sales exec so they can get that out to all of you.
And we do have a question. If you tell them you can't make a choice that may appear as assisting in structuring, wouldn't you then be advising them? So just want to give some clarity to that. We are telling you, don't tell people what choice to make. You are welcome to say, if you are doing this as an individual, you don't have to report. If you put this in your trust, you do have to report. But if you're not guiding them in which choice you think is the best choice, all you are doing is giving them the honest information. It's when you try to tell them what is the better option that you could be advising instead.
Yes.
And we did get a question, how does this apply to mobile homes in a park?
So the mobile homes in a park are exempt. Great question. If a mobile home is affixed to the property, they're not exempt. So if you have an entity or trust purchasing a mobile home in the park, you do not have to report. But if it's a mobile home affixed to real property, real land, and the buyer is an entity and or a trust, you must report.
And so when do we know? You're thinking it might be 24 to 48 hours. How is our process of notifying people if what we submit is not accepted?
We will get a message from FinCEN saying that it's just a simple message saying information incomplete, information. So we'll know right away. They'll tell us what's missing. And then we will turn around, and whichever party is missing the information, we will advise them the information was incomplete. They are missing XYZ. Please provide it as soon as possible so we can forward on the information to FinCEN. These are very good links and very much information. Like the previous slide said, you can help your transaction, help your escrow unit, just to educate, to understand, to know, your transaction. Basically, know your transaction and how if it fits into this criteria, if it's exempt. Explore these websites, try to get as educated as possible, because the more you know, the faster you close.
Thank you so much. We have a couple of additional questions. Oh, actually just one. How about when a transfer is coming out of a trust? We aren't concerned with the seller for this rule at all. So that will not trigger reporting if the buyer is an individual or individuals. And we also, your sales execs are starting to get some material available on this. Some of it is agent directed. Some of it you are welcome to share with your buyers. That's just simply informational about what's going on. And we have those materials available. So check with your sales exec on that. And we will send out a copy of this presentation to the attendees so that, as Anna advised, you can listen again and again. And we will be holding this class more than once because we know that things are going to change. We're going to get those real life examples. Right now, we're just imagining and forecasting what some of the challenges might be. But once we have actual challenges under our belt and see some things that are happening as a pattern, we'll be offering this class again. So are there any, you're welcome to unmute and ask a question right now. We appreciate all the time that you've taken. So if you have to go at this point, we just thank you again for taking the time out of your day and look forward to navigating this together. Anna, any final thoughts?
I just encourage you to just educate, reach out to us if you need more information, and just be patient. We are all in this together. This is all new. So just be patient, give a little grace, because we have been preparing for this. Your escrow teams have been preparing for this. And that's all we ask. Just educate, be helpful. We're in this together, and give grace when it's needed. And we appreciate you. We wouldn't be doing and providing all this information to all of you if we didn't. We appreciate you because, again, we're a team and we're all in this together.
Thank you again so much.
Thank you. Bye-bye.